Hey everyone, welcome to the KE Report in a company update from Heliostar Metals, chatting with the Vice President of Investor Relations and Development, Stephen Soock. Stephen and I are going to be recapping a whole lot of news here, all from this month. A PEA from the Paula Project, Q3 financials, and drill results, and an expanded drill program from Paula. All of this news was released this week, and I am going to be posting a link in the show notes to the company's website so you all can read over those news releases and send me any questions you have, because Steven and I are really just going to give the highlights of all of these news releases. Heliostar is traded on the TSX Venture Exchange under the symbol HSTR, on the OTCQX under the symbol HSTXF, and the Frankfurt Exchange RGG1. Steven, let's start off with Q3 financials. You had record production of a little over 9,000 gold equivalent ounces, Q3 sales of close to 8,000 gold equivalent ounces. Your operating net income, a little over $14 million US, net income of about $1.3 million US. That's after a lot of exploration costs. So talk to us about Q3 and how it lined up with the company's expectations, please.
Yeah, of course. Q3 was another solid quarter. Continued to execute, as you said, record production, which is great. Specifically, residual leaching continues to be the gift that keeps on giving at a bunch of these assets. We managed to increase our cash position up to about 35 million while still investing heavily in the business. Really a heavy exploration spend quarter for us with, as you said, almost 6.5 million of exploration costs. The bulk of that at Ana Paula. So the plan is working. We're generating lots of cash from the assets from La Colorada and from San Agustín. Obviously, have to give a shout out to the gold price, which is making that cash generation a lot easier every day. And then reinvesting that cash into the growth opportunities in the business while continuing to bolster our balance sheet. So, from our perspective, this was exactly what we wanted to see out of the quarter, and we think investors had the same view.
Let's talk about some of the costs then. Your consolidated cash costs, $1,500 per gold equivalent ounce. Consolidated all-in sustaining costs, so your AISC number of little over $1,800 an ounce for Q3. Talk to us about how costs are functioning here. It looks like they are kind of creeping up throughout this year, but are also in line with your expectations.
That's right. So I'd say costs have been steady on an operating cost basis. There's a little bit of nuance that came into our all-in sustaining costs as we've now become a producer with the reporting our costs kind of quarter in, quarter out. We realized we need to fully load our AISC number to be comparable with our peers. So while our AISC guidance was provided at an asset level, the AISC we've reported in Q3 included all of our exploration spending and our corporate expenses as well, corporate overhead, stock-based comp, which is again comparable to how most gold companies report. So while the number got bigger quarter over quarter, I'd say our actual cost to produce an ounce actually hasn't changed much. We've had very strong and very steady costs in Q1, Q2, and Q3 now. We do expect costs to go up in Q4. We're incurring a bunch of costs to bring the San Agustín asset back online into primary production from the corner area. So expect costs to uptick in Q4, but we are still tracking well within our guidance and expect to hit that range, if not be in the lower half of that for full year 2025.
Steven, let's also talk about cash. You ended the quarter with $34.6 million US in cash. You also had almost 1,700 ounces of gold unsold. So working capital total of about 46, almost $47 million. What movements did we see in cash from Q2? Are you still building cash? And walk us through where some of that money is being spent, especially on exploration. A lot of notes in that news release of exploration. How much did you spend on exploration, and what changes in cash did you see?
That's right. So overall, we added just about $5 million in cash to our treasury compared to the end of Q2. Plus, that the 1,700 ounces of unsold gold goes a long way. Those have obviously since been sold since quarter end. That's just a timing of sales thing, but can incredibly strong cash generation. We did spend about 6.5 million on exploration across the portfolio. The bulk of that was at Ana Paula. We had two ramped up to three drill rigs turning there, and we've since added a fourth man portable rig. So really hitting that hard. We continue to do exploration at La Colorada as well. And I believe we just started in Q3 mobilizing some of the drills to San Agustín to start to investigate some of the upside oxide potential there. So, these are assets that have been underinvested in by the previous owner, especially on exploration. So now that we've got sustainable, substantial cash flow, we're putting in that investment and that work to be able to see what other opportunities these different operating mines are going to afford to us, plus growing Ana Paula as fast as possible.
Okay, let's just quickly get an operation overview then. La Colorado mine, it says that maintains stable production. What does that mean, and what does that look like heading into next year?
Yeah, so La Colorada has been producing from the junkyard stockpile since January this year. That'll continue through Q4 and into the first little bit of 2026. We have a few other stockpile opportunities there to kind of bridge production. And then we're looking at transitioning to traditional open pit mining. We are highly confident we'll have all the approvals in place to be able to execute on the Veta Madre pit cutback. This is an open pit cutback of something that was previously mined, and we've been working closely with the government to get all those approvals in place. So we will transition to more traditional mining there in 2026. We've been stacking zero point 0.2 grams a ton from the stockpiles on the leach pad and making good money doing it. But tackling the Veta Madre ore will allow us to move that up to 0.7 plus grams a ton. So multiples of what we've been stacking and really drive our production higher from La Colorada into next year.
So, in terms of also near-term growth, what about the restart of the San Agustin mine? I believe all approvals have been received, and looks like you could be in production potentially by the end of this year.
Oh, that's right. San Agustin is going to be an incredible cash generator for us in 2026. Work's going on right now to get that first ore stacked later in the next couple of weeks, later this year, and we should see first production just near year end there and really come into its own through Q1. So that's going to be what drives significant amount of cash flow. It is a short mine life on the books right now at only 14 months, but at current spot prices, we expect that to generate about $65 million in net free cash flow for us. Beyond that, we see a lot of exploration opportunities. As I mentioned, we have been doing drilling there to try and expand that mine life. So we believe we'll be able to add a number of quarters, and every additional month we can add onto our production profile at San Agustin is another about $5 million in cash flow to our account. So we're really looking forward to having that mine up and running and driving our increase in production through 2026.
All right, another major driver for the company is the Ana Paula asset. On November 6th, you released the PEA. Look, essentially, this asset makes money at even the base case of $2,400. You had an upside case of $3,800 gold, and that came in with a post-tax NPV of slightly over $1 billion US. Talk to us about Ana Paula and key numbers in this PEA. What was expected? What surprised you?
Ana Paula really is a special asset when it comes to the amount of money it'll be able to generate. I'd say we'd always known that, but being able to put this PEA out to the market, it allows us to tell investors exactly, what those numbers are and why we saw the opportunity here. So as you mentioned, at $3,800 gold, just over $1 billion AISC with an IRR just north of 50%. We'll be able to produce about 100,000 ounces a year from this mine once it's up and running post ramp up at $1,000 all-in sustaining cost. And what makes Ana Paula special is that combination of bulk tonnage and high grades. So you get bulk mining methods, bulk low cost economies of scale to mine it. You only have to build a small mine to get a lot of ounces because of the high grade. And it's all a very concentrated package. So you don't have to do a lot of underground development and spend that sustaining capital to be able to keep the mine running. So that's really what drives the economics here. Right now, we're doing a 15,000 meter drill program that we just upsized to 20,000 meters to be able to show a 10-year mine life at 100,000 ounces a year in our feasibility study that we plan to put out in the first part of 2027.
Now, just reiterate some of the capex and sustaining costs of this asset and what the timeline would be to production here, build time, and anything else that needs to happen while you build this asset.
Sure. So our capex came in just a hair over 300 million, which is what we were targeting, and we think is a very manageable number for Heliostar. We intend to fund about half of that from operating cash flow from our two producing mines that'll be generated over the next 2 years, with the remainder funded by a project finance facility. So again, growth in our production profile and our cash generating potential without having to suffer any equity dilution, which is really the core of our Heliostar mantra. And in terms of timelines, we're moving as quickly as possible. As I mentioned, we added an additional drill rig here to be able to complete that program and tackle additional exploration opportunities. That feasibility study work is going on in the background here. We're doing metallurgical testing. We're doing, refined mine designs. We're doing additional variability work on the ore. We're also going to submit the permit modification near the end of this year. Remember, this is fully permitted for the old open pit project that we pivoted away from, but we still have to submit the permit modification to show the government what we actually intend to build. That'll take about 12 months to get back to us, is what we've been guided. So, over the course of the next year, we'll be working on all these items, the financing, the technical report, and the permitting, with the idea that we pull the trigger and start construction in the first half of 2027, 18-month build timeline, and then into commercial production in the second half of 2028, ramping up to that 100,000 ounce a year run rate.
So in terms of total production, as you said, ramping up to 100,000 ounces a year, you have a 9-year mine life here with total gold produced of, let's just say, 875,000 ounces, a little under that. What does the resource look like? And look, this is really, it seems like, geared for the PEA. So what's the potential here that this is much longer than a 9-year mine life, or on the flip side of that, that you could produce more than averaging 100,000 ounces a year?
Yeah, definitely. So right now, with the PEA captures about 500,000 ounces of inferred material. That drill program we're doing right now is focused on upgrading that into M&I, so we're able to add it into the mine life and the feasibility study, where you're not allowed to include inferred material. Beyond that, we're seeing good potential for exploration targets near planned underground infrastructure within a few hundred meters of the mine design that supports the PEA. So we think, there's other opportunities here, both in other pods of mineralization as well as some extension at depth for the Ana Paula project proper. The other thing we're seeing in numerous drill holes is where the grades come out higher than is modeled by the block model. And this is just what you get in terms of infill drilling, something that was conservatively modeled. When you've got wide space drill holes, you've got to interpret the grade as dropping in between them. That's the right way to go about this statistically. When you put that drill hole in between and you get more of the same, you're able to bring the grade up. So, that's where the additional annual production potential comes in, is being able to put higher grade through the mill than is shown in the PEA, as we upgrade the inferred material, both in terms of the grade and the certainty of those ounces. Now, big picture here, Ana Paula is the upper part of a much larger mineralized system. We know we have an incredibly profitable, 9 to 10-year mine that we can speak to right now, but at depth, we have high potential for this to lead us towards a bigger skarn system. So we know these systems in the Guerrero Gold Belt have a causative intrusion at depth, and then our neighbors, Torex and Los Filos, are mining that big contact skarn system right around the intrusion. Ana Paula, as we know it today, is further away from that intrusion, but we see signs that point us towards where that bigger system is. We intend to tackle that with the drill bit after we get the underground decline completed. This is something we're going to do next year, now that we've got that certainty of cash flow from bringing San Agustín online. I'm going to drive about another kilometer or so of underground decline to get us into the Ana Paula ore body, as well as provide a drilling platform, and just put us in the right physical position to start to chase that much larger potential system at depth.
All right, Stephen, thank you for that overview. Let's just quickly recap those drill results. Again, I think everyone should read over those news releases, because the drill results just continue to be really impressive. High grade. You have one drill result here of 83 meters, grading over 17 grams per ton gold. That's just one of a handful of different results within that news release. That was on November 24th. And you announced that program extended to 20,000 meters, as you said. What more should we be expecting from the drilling at Ana Paula?
Yeah, frankly, I think more of the same. As I mentioned, we're infill drilling a bulk tonnage high grade system. I think the headlines are going to continue to impress and remind the market just how special Ana Paula is. as well as, like I said, we're looking at some of these other emerging zones just a few hundred meters away from the deposit as it's defined right now. So, still to be determined, but stay tuned. The GEOs are getting excited on site. Every time they're excited, there's usually good things that follow. So I think that's what you should expect from the Ana Paula drill program through the rest of the year and then through Q1 with results continuing to come out as well.
All right, Stephen, thanks for going through all of this. If you do want more information, as I said, click the link, read over all these news releases. The company also has some webinars that were recorded on the back of the PEA and the Q3 financials. Those are on the website if you want an even more in-depth look at both of those news releases. Stephen, give us an outline. What else is coming news flow wise for the rest of this year? But that's only a month and then into next year.
So the last big piece we have for this year is a PFS, a pre-feasibility study for our Cerro de Gallo project. This is one we've been working on in the background, but it's the mine we intend to build after Ana Paula. It's an open pit heap leach project in the state of Guanajuato that has a historic study on it from 2020. We're refreshing that study and intend to put that out in the end, before the end of the year. I think that'll show another 100,000 ounces to our account that we intend to bring online before the end of the decade. So I don't think the market gives us much credit for that right now. So that should be a pretty chunky NAV growth step along the way. Beyond that, we've got first ore at San Agustín in the next couple of weeks with production to follow near year end. And we're also looking down the barrel of another permit approval at Veta Madre at La Colorada. We think we're very close to being able to get all the approvals needed there to bring that online potentially sooner than previously anticipated. Alongside, obviously, drill results at all three assets, the ongoing drilling at Ana Paula, some of the investigation we're doing at La Colorada for that Veta Madre deposit, as well as the oxide drill expansion program at San Agustin. So again, going to continue to be a steady news flow here through the end of the year and through 2026.
All right, Stephen, thank you very much for this update. We went through a lot here, but sounds like there's still more news coming, so I'm sure I'll be having you or Charles back on the show to recap that news. And everyone listening, please continue to send me your questions. I will get the team over at Heliostar to address those. Again, Stephen Soock, Vice President of Investor Relations and Development. Stephen, thank you very much for your time today.
Thank you, Corey.